But did you know that you can pay off your mortgage 4, 5, 10, 15 years earlier than your 30-year period? And at the same time, you can save hundreds and hundreds of thousands of dollars. In this video, I'm going to show you 8 to 10 hacks where you can save money and save years and years with minimum payments upfront or no payments upfront, and literally stress-free process. A proven process that I have used and many of my clients have used for years and years, and lots of other homeowners use it on a daily basis. One of your biggest expenses in your life is going to be your home purchase and your home expense. But did you know that your mortgage payments are as high as what you pay on the price? Let me explain to this by an example. Let's say somebody buys a house for $430,000, which is the average medium home price today in USA. And let's assume that they are putting 10% down, which is $43,000. And in today's market, let's say the interest rate is 6.25%. Your total monthly payment is going to be $23.83 per month, principal and interest. So you're buying your house for $430,000, but your mortgage over the 30 years on the same house, you will be paying, or what you call your total interest, will be $470,000. So your total house payment with the purchase price and the interest will be $857,000. This is how much the banks make, and that's why they don't want to tell you to pay it off early. I have been using this technique myself for the last 20 years, and I've got 4 more years to pay off my home. So let me give you the first hack, which is very easy and which is the most commonly used, which is to pay your mortgage bi-weekly. What I mean by that is, if you look at the chart as well, your payment, let's say on the $430,000 house was $23.83. So instead of paying $23.80 a month, let's say you pay on the first of the month, what you do is you take $23.83, divide that by 2, which your payment is $11.91, and pay the $11.91, let's say on the first of the month and the 15th of the month. Just by doing this, not paying anything extra, you will save a lot of years, maybe 4 or 5 years of your mortgage payments, of your mortgage years. And your total interest payments will be $857,000. So by paying on the 1st and paying on the 15th, not changing your total monthly mortgage payment, you will save over the life of the loan, if you start on the year 1, $108,000 just in interest payments. A very, very simple hack. Hope you use it. The second hack a lot of people use, including myself and my clients, is that you pay an extra $100, $200, or $300 a month. So let's say in this example, you pay $250 extra per month. So your mortgage payment is $23.83, and every month, like clockwork, you just pay $250 every month. In this case, your payment will drop significantly, and over the life of the mortgage payment, you would have saved $91,000 just by paying $250 extra per month. So this is a very common hack as well. Hack number 4 is to increase your income. And I know I'm not going to tell you what to do, but I have some friends who are working part-time, who are doing Ubers driving or DoorDash, or just working 10, 15 hours a week extra on a side hustle or work overtime. So any extra payment they get or any extra income they earn, they can use it towards your debt payment, credit cards first, and then your mortgage payments, $100 extra, $50 extra. It goes a long, long, long way. So I'm not saying that go get a job. I already know that most people are working really hard trying to make ends meet. But if you look ahead 10 years from now, 20 years from now, and you want to be debt-free and house paid off earlier than turning 65 or 70 or 75 these days, it may be worth for you working 10, 15, 20 hours extra or do a side hustle and pay off those darn credit cards and darn interest mortgage payments. One thing that keeps America poor is those interest payments, mortgage payments, and that's why the banks get richer and richer, and they're laughing at you every day. If you know of any homeowner and would like to share this video, I would really appreciate it. Please also make any comments on if you are making extra payments, or what are your challenges, or anything else about this video that you can make a comment. We would really appreciate it so that we can make better videos for you and get you better information, and also find out what our viewers are watching or would like to watch. Hack number 5 is to make lump sum payments every year. So I'm going to give you an example. Let's say on the same house of $430,000 with the same scenario, you pay $5,000 a year annually. You have money from gifts, or you have tax refunds, or you have bonuses, or you work extra. and December 31st every year, or whenever you pay $5,000 every year. In this case, you will save $148,000 on interest charges over the life of the loan. So instead of paying $850,000 for your total house, you will end up paying just $700,000 for the total house. A significant saving by making extra lump sum payments. And like I said, make them every year. They don't have to be the same every year. One year it could be $1,000, one year it could be $20,000, one year it could be $500. But any principal payment that you can make, lump sum or annually or every 6 months, will go a long way, because your interest is a killer payment for all. You can see clearly on this chart that if you make your regular payments, you are paying almost $470,000 in the interest charges over the life of the loan. But by making lump sum payments of $5,000, you are dropping those interest payments close to $320,000 versus $470,000 over the life of the loan. As you know, the higher your interest rate and the higher your principal balance, the higher the expenses that you have. So if you bought a house and there are 6%, 7%, or even 5%, and when the interest rates drop at least a point or half a point, you may want to consider refinancing so you get a lesser interest rates so that your payments get lower and your mortgage payments over the life of the loan gets lower. The other way you can refinance is, let's say you have a mortgage payment of $2,383 in this example, and you are paying 6.25%. For 30-year mortgage, you could refinance, and if you can afford it and if you can qualify it, then you can refinance for a 15-year mortgage, but instead of getting 6.25% interest rate, you may get 4.5% or 5%. So what's going to happen is your payment is definitely going to increase. Maybe your interest payment from $2,383, it may go up to $2,800, $2,900. So it's definitely going to increase. But instead of 30-year mortgage, you only have a 15-year mortgage. So if you can qualify and afford to do that, you knock out 15 years right off the bat. I myself refinanced my house in 2016 at 3% fixed rate. Of course, my mortgage payment went up by $600, $700 more per month, but I've got another 3 more years to go, and I did not have to pay for 30 years. So I'm glad I did that. This system really works. I hope you can do that. The next hack is a tricky one. Hopefully you don't get upset when I say this, but the next hack is live below your means and apply savings to the mortgage. Of course, we all want to go out. I go play golf and I go to the outside dinners and I go to the movies, and every month I have $200, $300, $400 in expenses just for having fun. So I'm not saying cut back all your fun, but cut back on some of the things you can. Maybe you're buying Starbucks every day or every few days, which is $7, $8 today. So if you can cut back on your lifestyle, whether you don't buy Starbucks or don't go to the restaurant every weekend or don't play too much golf or don't go to the concert, do less. So by doing less and less of those things, and even if you save $50, $100, $200 and saved money goes to your principal payment in your mortgage, you will knock out 2, 3, 4, 5 years just by adjusting your lifestyle and becoming more frugal. Remember from the book that I read a long time ago, The Millionaire Next Door, the number one quality of millionaires, you know what it is? Yes, you guessed it. They are very, very frugal. They are millionaires because they are frugal. You want to pay off your mortgage faster? Get frugal. The next hack is a very popular one these days. Let's say you have a 2 or 3 or 4 bedroom house. There's several things you can do. You can rent out a house to a friend or relative, and in Orange County where I'm at, Anaheim Hills, Orange County, California, rooms are renting for anywhere from $800 to $1,000 a month. So if you have 2 rooms, extra rooms you don't use, like me and my wife, we are alone, and I can rent out my rooms, although I'm not going to do that for my personal reasons, I could make $2,000 a month. So if you're living in a house and if you stretching or want to make extra payments, rent out a room, get $400, $500, $1,000 a month, depending on where you are. That's one thing you can do. Or you can rent out part of your room, or if you have an ADU, or convert the garage if your city allows it and use it as a rental, or use it as an Airbnb, or use your house as an Airbnb partially in the weekends and you can go somewhere. So there's a lot of ways you can do it. But these days, renting out rooms is very common, not only for students in colleges, but a lot of people who are stretching to pay rent, can't afford to pay these rents. They basically room rent. And it's a very common practice in Southern California, and it's nationwide practice. So it helps the tenant themselves by paying low rent, because in USA, the average rent right now is almost $2,000 a month, which you don't get a whole lot. In Anaheim Hills, Orange County area, you get a 2 bedrooms, 2.5 bath for $2,500 a month, which is very high. If I was in that situation, I would rent a room and go from there. And by the way, those extra savings that you get from your room rental or Airbnb or weekend rentals, you can apply some of it towards your mortgage or use the other money for other purposes. The next hack that nobody thinks about is called the Mortgage Accelerator program. The way this works is similar to the financial planning system that a lot of the companies offers. In fact, my company where I work, they offer that too. So basically the way it works is if you're working for a company and when they cut you a check and take out your Social Security and workman's comp or any other taxes, they can also take out a portion of that money and put it in a separate account, $100, $50 a month, $200 a month, whatever it is. So any extra payment that you want saved, you can tell your company if they allow it, is send it to a separate account. So when you get your check, that $100 is already saved in your mortgage savings account, and that makes it easier for you because it's harder to do it manually. But when it's automatic, it happens every month, and you do it even before you receive your check, which is a great way to do it. I do the same thing in my company that they offer, but instead of going to my house payment, it goes towards IRAs and 401ks and other financial planning systems. I don't think about it. Every month before I get a check, of course I'm on commission, so I don't get it every month, but whenever I get a check, that portion is cut off. I don't even see it, and it goes into my financial planning account. So very easy way to do it, and it's an automatic way to do it, because if it's manual, it's going to be tougher. I'm sure that if you're watching this video, you're a homeowner, and I'm sure you have a lot of stuff in your house. And if you do, and if you want to find out how to declutter a home, make more room, make more space, then please watch this video. A lot of people are viewing it. And also, if you need help and want to talk to me, I can give you more ideas on how to cut your mortgage and your interest payments. Be glad to talk to you. My contact info is in the description. Feel free to contact me. I'll be glad to talk to you. Sell smart so you can gain more.